Welcome everyone to the Kendall Report. Make sure you subscribe, hit the like button before we get started here tonight. So once again, we're continuing to see some interesting action in the markets in that we're continuing this rally that started. If you remember, I talked to you about this 3-day /day 5 bar trade, and it's continuing. All the criteria continues to be met every day. So we're about to come into day 5 of the action, which is the final day of the pattern. But what we're seeing here, you'll see here in a minute, the database, everything continues to expand. We have more buys coming in than we have had for a while now. We're really starting to see some traction again. And the markets are starting to rotate, with the exception of we're still not getting a lot of momentum out of this market yet. But I think the configuration suggests that this is fine, and I'll go through those details in the technicals here in a few minutes. I'm looking at my notes. I virtually have no notes. I went through everything, and there's only a couple things to discuss. And there's something I haven't talked about for a while, but the bond market is, I always say, is one bad auction away from disaster. And we saw I think it was a $32 billion 10-year auction yesterday, and it had a terrible tail on it, was met with very weak demand. So nobody's really looking for the treasuries at the moment, and it pushed yields from 333 up to 336. And I've been talking about these upward yields continue, but I think we're starting to get close to peaking out here. And we also saw some weakness on the Dow. And in real terms, the Dow isn't that weak, but market participants are playing that up as a big event at the moment. So I'm not going to cover the Dow again tonight. There's really nothing there to talk about. And we're going to focus on what's all in the news right now, which is the CPI that comes out on Tuesday. So the expectation for the headline news is for it to be down -0.2. I've seen -1s. We're going with -2. The core is expected to be up plus 0.3. This is consensus across the board, just about everybody you talk to, and year over year at 8%. So it appears, though, based on the action of the president and people around the administration, they seem to be awful happy. It seems like they seem to be set for the tone for a good number. And let's face it, they already know the number, so that's why they're out touting and getting ready to have some kind of, we'll just say, celebration around lower inflation. They need these numbers bad just because of how poorly the economy is done. And, and I don't know if you folks see this. I mentioned this, I believe, in last night's stream, but I just went 50 miles away from here and gas prices dropped 30 cents a gallon. So most of the folks up around the region where I'm at are gouging yet for 30 cents. You get a little further away from the cities, and all of a sudden prices start to get down fairly good, down to the 360 range. But I just want to mention, I was going to cover a bunch of commodities. I went and looked through them. I'll talk about that for a few minutes tonight. But it looks to me just about every commodity, whether it's grains, whether it's copper, crude oil, just everything you can look at, prices are down. So it looks to me that the headline number will be at least that 0.2. Maybe it'll be better than expected. Possibly the algos will be able to bid the market one more day and get a little more action. I'll talk about some of the targets that I mentioned on the S&P here in just a few minutes. I go through the technical, but maybe there's something else. And I guess this is my big story of the night, if there is one, is that maybe what's happening is the Fed's already pushed us over the edge, and we're starting to see some deflationary pressures come into play. And maybe, just maybe, these get going a little faster than the Fed even thinks. And now they're committed. It's really somewhat comical, I'll say, for just the way the markets go, for the Fed to get leaning so hard one way, they can't catch themselves until they fall over, then they have to pick themselves up. Just like it was transitory, and then it wasn't transitory, and then it's no time to stop working on inflation now to maybe it was time to stop. And I talked to you about something else that maybe comes into play as well, is that it's possible that they start to play this peak inflation story out. I watched about, I don't know, maybe 30 minutes of Bloomberg a couple hours ago on their Asian opening, and that was every other word that they had to say was peak inflation. Markets are expecting peak inflation. That's why everybody's buying. Of course, last week and 2 weeks ago, we'll go more 2 weeks ago and before, everything was coming in, inflation was surging, everybody was going to freeze to death and die in Europe, and all of those stories were so extreme it was laughable. And now we're seeing pretty much the opposite, and it's just the way the markets go. So, but we are seeing market sentiment turn a bit, and I think there's more to it. And one of the things that we talked about in the live room today, and it got into a thread. I guess I have more to talk about than I thought, but we got into a bit of a thread today in the live room, really starting to look at some of the patterns that are emerged, and I'll talk about those in the technicals here in just a couple of minutes. But there are some bigger patterns that are starting to unfold that are starting to look like maybe there's a retest of the 200-day, and maybe there's even more than that, which would be a move back to 4280 and beyond. But I'll set some of this up. We'll see what kind of inflection points we get this week. I think CPI and PPI are going to be plenty for the market to digest, and especially the week before the Fed comes out with numbers. So that's going to be, I think, a very interesting place to watch as far as the markets and the market participants go and what kind of action we get. And I think as we come into Wednesday and we come into PPI, that's been a little bit hotter number. We'll see if we get any moderation here and to see if they can play out in the algos, if they can play out this peak inflation story. That could end up to be a driver. But typically when we get to the point where we are now, it gets more difficult, especially when I show you some of the technicals. There's still a huge upward bias in the markets for the moment, and that's not going to go away for a little bit from the standpoint of what's going on within momentum, within our database, and so forth. So let's go ahead, take a look at the database. I don't see anything else on my notes. Let's go ahead through the database, get through the video tonight. I don't think it's going to take long to set up the action for Tuesday. As I mentioned, we got a little more traction, 559 buys, 150 sells. Our database is now at 5753. Yesterday, it was 57.09. So not a big change by any means, but a continuation of what we've been seeing. If you recall, when the markets were going down, even down to the 39 handle, the database stayed very consistent in its holdings. It did not give up. And the reason for that, and I tried to do my best to explain what was going on within the context of the database, is there was quite a few symbols that were still bullish that had went up, started a correction, and a lot of times you'll get that midpoint of a trend. And typically there's a 34, 40-day trend, which is a couple months of market action. Those are trading days. And then there'll be a recycling. And I mentioned that we were in the recycling phase of the database, and that appears exactly where we were. Right now we have 9,239 symbols long in the database. So that's a pretty decent percentage. We're close to 60 percentile. Normally, we don't get a lot over 62, 64%. That's about as bullish as most markets get. So from a short-term basis, we're continuing to see a lot of traction here, continuing to see incremental traction, net 500 plus symbols a day. So it's still growing inside of this because we got down to only about 50%. We never dropped below 50% in that recent decline. So it's been very interesting to watch how the database has developed within this sideways, let's call it a bottoming trend, because we really set up a right shoulder so far, especially since we went down almost a perfect 0.618 retracement, and now we're trying to move higher. So let's go ahead and get into the technicals. Should be able to get through this broadcast tonight very quickly. So the first market we'll look at is the S&P 500. We've gotten above all of the moving averages again. PPM1 is up at a 0.31, so it's in trend mode up. That support level is down substantially. Let me get this up on the screen so you can see the market grid. The market grid so far market grid so far has traded up. The high so far is 41.43, R1 41.45. So we basically printed R1, S1 41.14, the low's 28. So we could see a little bit more downside. Looks like a consolidation. We also have some decent support here at 41.01 now, which is the 21 period moving average. And also the 40 is right there as well. 41.10, 41.01. Those should be really good support numbers. We look at the market grid. 41.14 is S1, right into that range. And then S2 is 40.96. Yesterday, what we saw in the action in the live room, what we were watching, is we traded down to about 17 or so, and the market would bounce right back. And then right at the end of the close yesterday, what we saw was a big surge into the close and a bid after the close. And so we're basically flat from that area, but we were able to trade around 32, 33. And then, as I mentioned, we traded up to 43 overnight. So we came in a little stronger, and overall the pattern's holding up pretty good. What we're not seeing here is we're not seeing any real acceleration on PPM2 yet. It's basically flat. It's minus 0.22. So it's still a bit of downward pressure here at 41.01. So I think all we're likely to see from here is a move down into this 41.10, 41.01 levels I mentioned, which would be an S1. Extreme would be an S2, which would be somewhere in the context of those numbers. As far as the PPMs go, PPM3 did turn down a little bit, but it's really neutral. It's up at 0.106, so it's still positive. It's just basically flat. So that is acting as a little bit of support, and that's why I mentioned this 41.01, 41.10 area. We should see that continue to hold right in that zone. So as we come into today, I would expect to see this range set up this way. I mentioned the 5-day trade. If we get above, actually, if we trade above the 45 level, which is S1, it would suggest that we take profits. I mentioned a target zone that we worked on last Thursday in the live room, and that number was 41.30 to 41.60. So here we are right in the parameters of R1, R2 would be right into that range. Like I said, we've already printed R1. So we're pretty close to at least a peak value for this 5-day sequence. We could see a 3 days down. I was talking about if we didn't get through the 21 period moving average today, that we might see a little bit of a pullback. We went right through it like it wasn't there. We're continuing to see these upward patterns. And like I said, PPM1 is still expanding, just waiting for PPM2 to kick in. Next, we'll take a look at the NASDAQ. NASDAQ traded right into some of these numbers. They seemed somewhat far-fetched yesterday into this 12,800 level. We've seen 12,865 as a high. We're looking at R1, 12,883. So just like with the S&P, we've traded R1 already. S1, 12,763, not quite down to the R1 yet. So watch those two levels. Well, same scenario. Looking at S1, R2 possibility today, and we could see a little more volatility with the news coming out where we get S2, R2, and just watch the trigger points on these on the market grid. Those of you that had the indicators, make sure you mark those on your trades if you're trading intraday. There's one other thing I'll mention here. There's a yellow dots that are coming in up here. This is pretty significant. It's going to be a major resistance for now, 12,590. I mentioned this number yesterday. There is right now about a 40 to 50% probability of it getting up there. If we get PPM2 to turn up, then that will rise to about a 60% probability that we're going to move up toward that level. And that will be a retest of the 200-day moving average. I think I'm going to save some of the scenario that we talked about in the live room for tomorrow night after we see the action after the CPI to discuss where I think it could go. But this is somewhat illustrative that we could go back toward the 200-day moving average on the S&P as well as the NASDAQ. And there's some decent momentum, but nothing really confirming just yet. We need this PPM2 to turn up. And once that's turned up, then that's going to be the trigger point for an acceleration to the upside. Other than that, we got the 5 days up that I was talking about. We could get a couple of days sideways in this pattern. But I believe that Tuesday's action is going to tell us a lot about the rest of the week. We may get one of these 8-wave extension or 8-bar extension patterns to unfold. Next market we look at is Russell. Russell, same configuration. Most of the time, these indexes are highly correlated. So I'm just seeing the same thing here again, where PPM1 is accelerating. PPM2 is still negative, has not turned up. We've not gotten the confirmation, but this is a bit different pattern now. I would just say that we're a lot closer to penetrating this 200-day than we are on the S&P or on the NASDAQ. There's a bit more move to the upside. And as I've been talking, I would watch this market very closely, as this may be the trigger point or the leader if we are going to take out that number, that this may happen here in a Russell first. Like I said, same configuration on the PPMs We've got decent momentum on the front end. We just haven't got the confirmation yet, which leaves it somewhat in limbo from the standpoint of a big acceleration. This does not appear to be the type of pattern on all of these indices that is going to suggest there is some kind of major big rollover top. We could see a little bit of a retracement back into maybe the 10 period moving average would be an extreme here. That's 1850. That would be a pretty big move on the downside from here. All right, so take a look at the 10-year. This is the daily. I talked about this upward channel that's in here right now. Let me expand this a little bit just so you can see the pattern a little better. We've got a nice rising 10 underneath here. That is at 3.23. We traded almost down to that level. We traded down to 3.26. I thought we could see 2.25. We didn't quite make it. Rebounded 3.365 on the upside. We went out at 3.62, so right at the top here. And the slope here is still very substantial because you've got the 10 period moving average rising about 3 basis points per day. So it's going to be we're going to call it 327. That's going to be your targeted low. You look at the market grid for tomorrow, 384, 341 with extreme probably of 343. So these rates are still looking like they want to go higher. And this is the reason for the lack of demand in the 10-year. Nobody really wants to step into these things just at the moment, in spite of the dollar weakening just a little bit. Let's take a look at the weekly. Same configuration from the standpoint of this upward channel. The only thing that's different here is we have some substantial upside. The 10 and 21 are virtually the same value, 299 and 299.4 and 299.5. So we're right, almost identical here. And we've got decent upside support. So the probabilities of getting below that 3% level right now are nil. I realize that's 30 basis points away. That's a long ways from here. The upside targets are still valid here, 330, 360. I'm just going to round these numbers off at 378. These are still valid numbers on the upside as we come in the next week. I think probably the most interesting pattern that's on this page right here is the very bottom indicator, the Wavetech 200, showing that the 200 period moving average is starting to turn up substantially, which typically will suggest a longer term uptrend in rates. So that will put a floor somewhere 240, 280, something like that as we come down the road and we start to get into 2023. So rates are definitely going to stay high. There's no big retreat on rates at the moment, as the Fed, I believe, will continue to push this narrative. Whether or not we ultimately end up into some sort of triggering some deflation or something like that, that's a long ways from there. Right now, we still have plenty of inflation around. The core is not going to soften, I don't think, that much. The next couple of days will at least be reviewing from the standpoint of what's likely to happen in these yields over the intermediate term. But everything looks very positive, and the floor is very clear here from the standpoint of any reaction that we see will be limited at least down to this 10, 21 week moving averages. That's, we'll call it 3%, but it's probably more like 310, 305 on the downside. We normally won't get down all the way to the averages. That would be a substantial move. Right now, based on a daily, everything I'm seeing, we're continuing to see that go on. Now, we haven't looked at the yield curve for a few minutes here, but let me get to the right page. Yield curve has started to steepen a little bit yesterday, so there's nothing, as far as I can see, too scary here even though we still have the inversion on the 210s, and that whole thing still exists. But like I said, I'm still looking for the inversion on the 530s, which we were very close just a few days ago. And there seems to be a push by the Fed that they're not looking to get that inversion on that next level on the 530s. Next, we'll take a look at the crude. Crude continues. I think this, like I talked about last night, we have a substantial amount of downward pressure at 91. We're back at 87.18. The high was 89.10. I'll show you on a daily. That was almost the exact hit on some key numbers today. But that number is going to continue. 89.18 was R1. So we basically printed R1 weekly. On the downside, we printed 85.15, almost S1, R1 weekly on the crude. Let's go over to the daily because I think there's some interesting numbers in here. The high was 88.15. We traded just above the 10, but if you look at PPM 1 is minus 0.52, PPM 2 is minus 10, minus 0.36. So all of these averages are right above this market action here, which suggests there's a major resistance between 86 and 89. Like I said, we printed up to 88.15, and I think the high, as I just said, was 89.10 that for the week. So that was starting off on Monday night. So we're just looking at this continuation of this pattern. The only thing that's happening here that is noteworthy is we are seeing the PPM starting to turn up. So what that may suggest is that we have one of these bubble bottoms on the market grid, and that just suggests that we get into a sideways range from here and that we don't have any real downside where we really get locked in the range. And I'm going to go back to the weekly just for a second here, and I'm going to call this range really this S1, R1, which is 89.20, 84.40 is going to be extreme. I don't see us getting down to the 81 handle. We should stay fairly narrow, staying below the 10 on the weekly. And I believe this upward shape on the 40-period moving average is going to keep the market at least trying to stay biased to the upside for just a little bit. Next market I'll cover is gold. Interesting enough, this is the weekly. I didn't see these dots here buried. So I did actually. This is a weekly low that's trying to come in this week. So if we can hold last week's low at 1701, so far we've had 22 low. The PPMs, I talked about this last night, where we're starting to turn up, even though we're kind of go up and we hit a wall. We went to the high 46, and we come to the 10-period moving average 1755. So I've been kind of marking it off at 1760 on the upside and around 1705. So S2, maybe R2. That's basically what range we should stay into. We look at the low of 22. We're just above S1 right now, but S2 would be the extreme. R2 would be the extreme on the upside. Not a lot other than that. It looks like we're trying to set up a low of some sort. So this is the weekly Bitcoin next. And Bitcoin is trying to trade up. I thought it was interesting. We were able to trade into some of this resistance already. We're looking at the market grid. The high's been 22,478 and 22,225 is R1, 22,854 R2. On the downside, 21.1 is S1. So I expect we're going to hang around this S1, R2. As long as we don't see a big collapse in equity prices, I think we'll continue to see this market set up along this 200. And like I said, I'm watching this PPM2 to see if it can turn up, but this won't happen until next week. So best we can expect is to see it stay above these levels at this time. Okay, folks, that's going to do it for tonight. Appreciate everybody participating. Make sure you hit the like button and subscribe to the channel, and make sure you get these indicators. So we've got some interesting things we're working on for the community. You're all going to find out about it. It's taken us longer than I thought to put things together, but it always does. It's sort of like software. It takes a long time longer than you think to put things together. So anyway, folks, thanks for watching. Make sure you hit the like button, and I will see you tomorrow night at the same time.